I'm Jagir, and in today's video we are going to do an urgent, timely update on Bitcoin. Yes, I know you're concerned, and should you be? Have we reached the top of the bull market and we've seen this big correction? Is it the end? Your profits are down, all portfolios are down. What should you be doing right now? So I'm going to give you the high probability analysis based on Elliot wave theory and Fibonacci theory. And if you haven't seen my videos on Bitcoin on April 19th, which we projected what's happening right now, and on May 3rd, projected what's happening right now, and now I'm going to give you a timely update on what we should anticipate happening next and what you should do about it. Now, if you don't know me by now, my name is Jagir. I'm the award-winning author of The Extraordinary New Venture Capital Opportunity, How to Invest Like a Pro. I've been investing and trading in currency markets for the last 15 years, and I now apply that knowledge to the crypto markets. I was also featured in the best-selling book, High Probability Trading Strategies, back in 2008. I'm a math teacher by trade. I got this mathematical mind, but my job is to inspire you, help you, and educate you so you can lean on me, especially when we've got a day like today when Bitcoin's price is, some will say crashing, some will say all kinds of terminology. I want to get those emotions in check. And if you find today's video helpful, useful, educational to get your emotions in check, hit the like button, subscribe, hit the bell notification, because I want to bring you this wisdom, my experience, especially if you're new to the space, new to crypto, new to blockchain, new to Bitcoin. So let's dive straight into the chart and have a look. Just a quick recap. I use the software Trading View. So we projected this, guys, because this is textbook Elliot wave and Fibonacci theory, just theory in practical, but the practical use case. So we projected for this 1, 2, wave 3, and after a wave 3, we see something called a wave 4. And I've just used this replay button to take the date of April 19th, where we had these price targets. And I drew this in advance saying, look, we're likely to make an A, B, C of a wave 4. So let's just see how it unfolded. And again, this just gives us really useful information. So we had a wave A, like textbook Elliott wave, and hit Fibonacci numbers. Textbook wave B, just hit that perfectly. And then we had the beginning of a wave C. Now, when we projected this in advance to give us really useful information and plan, not only for our position in Bitcoin, but also to get an indication of the rest of the market as well, and what phase of the market that we're in and what we can anticipate and prepare for. So, they say success, one of the keys to success is when you prepare for the opportunity, and when preparation meets the opportunity, boom, success is almost guaranteed. So then we had this big down bar. So now I'm just going to zoom into this section here, because this is what we're really interested in, right? This section. Right, let's just zoom in here so you get a really clear picture. So this was April 14th high, which we projected a wave 3. We had what we called a wave B, an A forming a wave B, and then we anticipate that a wave 4 typically has a minimum of an A, B, C. And we had these price zones, which are so powerful. The first price zone was 43,000. Now, when the price was, 60,000, 64,000, talking about Bitcoin possibly going to 43,000 sounded insane. But we even said the maximum likelihood is going to be 36. But there's another projection that it might even go as low as 31. Unlikely, but possible. In fact, there's one other number that I want to add in here, which will coincide with this. I'm sure it will. There you go. This 61.8% is of a wave 3, and this is the maximum that a wave 4 tends to go to. Most common is 38.2 to 50%, but you do have occasions where there's an overextension, a big correction to the 61.8, and we want to be prepared for that. So what's happened in the last few days? Well, to confirm this wave B, we need this wave A low to be exceeded, this part here. And we've got these two really key time and price zones, and really there's a third one down here as well. So if these two get exceeded, we will tend to see it go to the next one. So let's just have a look. Now we had a down bar, and then I believe this is 2 days ago, yesterday, and now this is as we are today, right? Big down bar again. So it looks like we've exceeded this 38.2%. So what's the next price projection? It's down here. Another thing that I've done, you'll see this red line. Let me make it a bit clearer for you, because this is valuable information to kind of get your emotions in check. Because look, it's tough, you know, especially if your portfolio's down. You know, it's not the most comfortable thing in the world, but it's all part of the game of investing and trading. You know, taking drawdowns and taking a loss before. But what should we anticipate next? That's going to be the most important part now. So let's just zoom in a bit more, because some really key information that we want to pay attention to. So we're coming to this time zone. Time zone, what is this exactly? Well, I've measured this wave A, how long it took for the wave A to form, and projected it forward from this wave B high. And typically a wave C is the same as a wave A in terms of time and also price. But the price of the projection was up here, and the next price zone is here and here. So we might see, well, we're coming to this zone here, so we can almost eliminate and kind of clean these ones up, but we've exceeded this. So what should we anticipate? Can we get a bit more data that allows us to kind of really go, okay, this is forming, but where is the high, very high probability end of this wave C, where we're likely to see the end of a potential wave 4, and then some all-time new highs. So what I want to get across to you today, and I get this across to my students, is this is going to be the biggest, the next 2 to 4 weeks, next 2 to 6 weeks, it's going to be the biggest opportunity, high probability opportunity to get all your positions in play and ride what's likely, very probable, of being the most aggressive, bullish end to a bull season between now, September, October, November. Right? Yes, the Bitcoin price is coming down. You may have heard some like really wise investors say things like, when everyone is selling, you should be buying. And when everyone is buying, you should be selling. But we can get a bit more precise to say, okay, when everyone is selling, so there's a big sell-off, this is a sell-off, this is profit taking, this wave C, and then you get some panic selling because people are like, oh my God, you know, what happened in 2017 is gonna happen right now. Well, I think that would be premature, that would be amateur thinking. We wanna go, no, this just looks like a classic textbook A, B, C of a wave 4. What comes after a wave 4 is a wave 5, and a wave 5 tends to be bullish. And in the crypto market, it seems to be similar to the commodity market, where wave 5s tend to be overextended and are sometimes the most bullish part. And knowing what Bitcoin is like and crypto is like, the tail end of the wave 5 is where we're probably going to see some serious panic buying, and the price is probably going to explode towards the end of the year. And that's where we want to position ourselves, because all altcoins, which is all other coins other than Bitcoin, also tend to just do a parabolic exponential pump to the ceiling, like it skyrockets. But then it also tends to turn quite fast. So now we want to start preparing ourselves. So regardless of whatever your portfolio is doing, let's look at the factual information. If we can, put the emotions aside, because I know, look, fear, greed is what drives the markets. Fear of missing out, fear, uncertainty, and doubt. And if you're new to the game and you've just bought Bitcoin and it's pulled back 20, 30, 40, 50%, hey, it's not nice, it's not pretty, but it's all part of the business of investing. So let's dive in a bit deeper now to go into a 4-hour chart. This is a daily chart where every bar represents one day. But if we jump into a 4-hour chart, we want to look at this wave C, because wave C's typically break down into a 5-wave sequence, right? And if you've done my masterclass, which is a free crypto masterclass, how to fund your retirement, I covered this section in a lot more detail on how these waves break down. And I'll kind of cover, you know, risk management and so on and so forth. So if you haven't taken it, it's in the link below. Take it, it's free. It's awesome. I'm getting some great feedback, but it's designed to help you. But now we're going to dive into this wave C. So let's jump into a 4-hour chart. So now we're looking at this, right? And we're looking for a 5-wave count. Now what I'm seeing straight off the bat, and I've been paying attention to this very, very closely. And I've been waiting for this part to really bring this video to you, because I know, you know, naturally, you're gonna feel, you know, if you're a human and if you're brand new to the space, you're gonna feel these emotions, which are uncomfortable, scary. And even if you've been in the space for a while, and if you haven't got this kind of technical analysis background, this is tough. But what I'm going to show you should give you a bit of peace of mind. Now, it's not guaranteed, but it's just highly probable. And this is, you know, this is what I used to see all the time in the currency markets, which I was trading for over 15 years. And crypto is a currency, effectively, right? Cryptocurrency. I know it isn't because it's different use cases, so it's new. But what we're looking at here is a potential 1, 2, 3, 4, right? And what comes next is a 5. So it looks like we formed our initial 1, 2, 3, 4, and we're on this final wave 5 of a wave C of a wave 4. This is big time, guys, because I'm going to dive in a bit deeper in a second. But what we're going to do is we're going to project forward. I'm just going to get rid of these so you can see this fresh, because this is all about now giving you a bit of peace of mind and a bit of confidence in what we should anticipate. Right, let's just get rid of this as well. You can tell I've done these earlier. So get rid of this line as well. I like to keep my charts really clean. So this has been exceeded, so that's no longer relevant for us. We are now looking at the 50% and the 62% retracement for a wave 4 low, a potential wave 4 low. But now let's just take this into account. This is called account on a lesser degree. Hey, look, guys, I also try and keep my videos less than 5 minutes, but this is really important because look, people are going to be panicking. You might be panicking. So this is very valuable that you get this information in time. I'm hopefully going to get this released like straight away. Today is the 19th of May, so I want you to get this just so you can kind of plan. Because even though you might have taken a drawdown in your account, which means you're losing percentages, this is, if you can really plan for the wave 5, was highly probable, then we can make some serious returns. So your overall portfolio should look very healthy by September, October, November, December this year. So let's now project forward typical price targets for a wave 5 low. Right, I've just measured the beginning of wave 1 to the end of wave 3, projected from wave 4, 100% is typically the maximum that a wave 5 goes to. It might overextend, but that's the typical maximum. You can see it clusters quite close to this 50%, which is this wave 4 retracement that we did earlier. That's going to be key for us. There's a few other metrics that we want to do, but that one's sufficient for us right now. The other one that I wanted to do for you, which I did before, I'm just going to do it again, is a wave C has a direct relationship with wave A, which we're going to measure here. We're going to measure this wave A, high to the low, projected from this wave B. Most common is 100%, but you can see it's been extended over 100%. And then what's less common, but the typical maximum of a wave C is 162% of wave A. And you can see it clusters straight over the 62%. So if we exceed this part and it's quite strong, we may see it go down towards the 31,500, right? I know that's, it's a big deal, but it's just natural. It's natural, right? People that got in early at 3,000, 10,000, 20,000 in Bitcoin's price, and it rolled up to 64,000, they're naturally going to take some profits, take some money off the table. And because a lot of people are investing in this as, just trading. So now let's look at this part. So now we've got this really key price targets. And then we need to get rid of this as well. I just want to keep it really, really clean because it's almost not that relevant now. I want to now look at this last part of the market here because it looks like it's breaking down to a 1, 2, 3, 4, 5. In fact, do you know what? We're going to keep it on this chart because it's clean enough on the 4-hour chart. We don't need to drop down to a lower time frame. So we've got this time target. We've got this wave C target is 1, 2, 3, 4 coming down to a 5. This final 5 looks like it's also breaking down to a 1, 2, 3, 4, 5. And then this part would also break down to a 5. But we can get now a really clear, clean price target, which is highly probable going to be the end or close to an end of a wave C of a wave 4. And yeah, let's just project it forward. So let me just make it really clear for you. Let's just do this. I'm going to use this tool for this one because we've got the full 5 wave count. It's like a 1, 2. Well, it looks like a 3. A, B, C of a 4. And then we should see a 5 forming. So this looks quite good for potentially making a low somewhere around here. Now, it hasn't been confirmed yet, but we've got the wave C, which might be around here, and then the wave 4. Right, we're coming close to this price target. This I projected forward a little while ago for the 21st of May, and often time targets, often you get the low within 1 to 2 days, 3 days even. So now let's just do targets for this. It's going to be exactly the same as we did for the larger degree. I also want to just make these numbers smaller. I like to make them smaller so we can clearly see that and a different color. I get rid of the waves and then make them micro. Let's just go micro. Yeah, just so you can see that is a separate wave count from this 1, 2, 3, 4, and then we've got a 1, 2, 3, 4, 5 of a potential 5. Let me draw this here. I'm taking my time here, guys, because this is, I know it's a really crucial time. Let's just make this crystal clear for you. Now, if you're taking my course, I do some advanced courses as well. When you do my masterclass, I'll show you some of my advanced courses that I cover this stuff in great depth. But it's so powerful, because if you can see this, you can keep your emotions in check. You can do proper risk management and apply this yourself live. So now let's just dive into this. Right, I'm going to zoom in to the last part, what looks like the last part of a potential wave. You see this? A wave 5, of a wave 5, of a wave C, of a wave 4. Right, this is big time, guys. This is big time. This is, some real stuff. Most people don't know this. And even if they know the theory, they don't know the practical application of this. So I'm showing you this live as of, it's like in the UK, it's just before 8 a.m. UK. I'm going to take this measurement from the wave 4 high, this part here, or the beginning of the wave 1 of this run. I'm going to measure it from this wave 3, and then I'm going to project it forward from this wave 4. What looks like to be a wave 4. And the key number that I'm really looking for is this 100%. Now, typically, that's the maximum, typical maximum of a wave 5. So now we've got 3 time frames. We've got this retracement for a wave 4. We've got this projection of a 1, 2, 3, 4, what's potentially a 5. And then looking at this lesser degree, we've got this other 100%. So now we have this really tight target. Now we can't do the same for here, but I think we've got enough to go, okay, do you know what? This looks pretty healthy to go soon. Within the next couple of days, if not today, we should see the low being made. The momentum, on the daily chart is oversold, meaning if you look at these lows, it marries up low to this momentum indicator, which tells us the momentum of the markets, because they tend to move in a nice flow. And if that coincides with time, so we've got this one time target of the wave A, price, which is this Fibonacci ratios, and pattern, which is a wave 4. So let's just kind of zoom back in. It's a wave, potential wave, let's just hit potential wave 4, an A, B, C of a wave 4, and then of this C, a 1, 2, 3, 4, 5, and of this wave 5, a 1, 2, 3, 4, 5 of a 5 of a C of a 4. So now we have this really strong confluence of events, which is basically 4 things telling us pattern, price, time, and momentum, that we are very highly probable coming close to a low in Bitcoin. Now, Bitcoin is the brand of blockchain. It's the brand of crypto. It's like the credibility. And when Bitcoin goes down, it does tend to have a negative impact on everything. It does, right? And when it goes up, it has a positive impact on everything. And this is going to be the opportunity of a lifetime. The next, where are we now? We're in May. So the next 5, 6, 7 months, we should see some amazing, like if it turns out, like it's not guaranteed, right? But if it turns out, this is highly probable. If it turns out this is the wave 4 low, what will we need to confirm this? Well, the first major confirmation, there's 2. First indication is taking out, this low, this high here, this mini micro wave 4, but then this actual wave 4 here. But then a stronger confirmation would be taking out this wave B high. And then the final confirmation that this wave 4 is absolutely confirmed is taking out this wave 3 and making all-time new highs. And is it likely? Yes. Should you be buying right now? Well, there's a saying, the trend is your friend. Ride it until its end, until it reaches its bend, right? And the trend overall, like if I just zoom back out, because people get too narrow focused, like in the last few weeks, they're narrow focused. But what we want to see is the bigger picture. What's the bigger picture? What do you see? What's the trend? What's the overall direction of the market? Right? Is up. Is up. Look, it's just up. It started at, down here in September 2020. It was like 10,000. It got to 65,000, and now it's pulling back to around 40,000, maybe a bit lower, which is just normal, natural, healthy. I even said in my previous analysis that a typical wave 4 correction is in the range of the previous wave 4. So we've had this 1, 2, 3, 4, 5 of a wave 3. The previous wave 4 was this zone. And it sounded crazy at the time because it was like so far away. But now it just sounds logical because it's happened. I said there's likely that the correction is going to happen in this range, which is very common and typical in all markets, not just crypto. The forex markets or the currency markets, the stock markets, the commodity markets, the silver, gold, oil, all those kind of price charts. So straight away, we've got so much indication saying, look, it's in the typical range of the previous wave 4, which was between 41,700 and 28,000. We've got this retracement of measuring this high to this low of a wave, potential wave 3, but now that wave 3 looks like it's been confirmed because these lows have been taken out to be 38.2 to 40 to 50%. Now we've done this projection from the wave C, 1, 2, 3, 4, 5, and a 1, 2, 3, 4, 5 over 5 over C over 4. Right? But when you're high level, like, take my masterclass. If you haven't taken my masterclass, it's in the link below. I covered this, like there's a section I cover Elliot wave theory in a lot more detail, how the waves tend to break down. So and I cover that wave 4, and it kind of gives you that high level overview. But I also cover risk management. And the risk management is about how to manage your money. Because this stuff happens, and if you've gone all in and you haven't properly risk managed yourself, it's very uncomfortable. You want to be objective, mechanical, business-like, because investing and trading is a business, and you need to treat it like a business. All right, so there you have it. There you have it. So we have a really tight analysis on Bitcoin. We called this back in April 19th, before the news of Elon Musk. People are saying, this has happened because of Elon Musk. Look, when this stuff happens, there's always a news announcement that's correlated, and that's what people like to have a justified reason of why people are selling Bitcoin. Look, simple, right? Just imagine yourself, right? If you imagine yourself and you manage to buy Bitcoin at $10,000, right? And you put in £10,000, right? And you bought at $10,000. And you rolled this whole wave and you got to around $50,000 to $60,000 in terms of Bitcoin's price. That means your Bitcoin, your portfolio is worth $50,000 to $60,000, right? And if that's really significant to you, you're going to want to take some profits. Now think of the bigger players where they've put in $1 million, $5 million, $10 million, and they've, 500%, 600, 700% increase. It's time to take some profits. And the big players are very familiar with the psychology of the markets. That wave 4 correction happens. People panic sell. It drives the price down. They make huge profits towards this end, and then they're going to buy more because they're going to ride up that wave 5, and then it's the same thing's going to happen, and we want to be prepared for it. So there you have it. If you found today useful, because this is the kind of content I want to bring, especially when there's highly emotional, timely things happening like Bitcoin today. Like, subscribe, hit the bell notification. I'm here for you. I've got 15 years of experience trading currencies. Now I bring that to cryptocurrency. Not many people that I've seen are doing Elliot wave properly and Fibonacci properly, where it's practical. And Leonardo da Vinci said it best. Simplicity is the ultimate sophistication, right? And if it's simple, it means it's actionable. And if I can simplify things for you and bring my knowledge to you, hey, look, that's a good job from me. You can smile and say, okay, I've got a better peace of mind. So actually, I'm gonna say one last thing. Some people are asking me when's a good time to buy Bitcoin. Well, if it does come to a low, rather than just buying in the hope that it's reached a low, what's a good strategy is actually just putting an order in on a swing high. So what's a swing high? Well, the major swing high where we labeled was this wave 4. So if the price turns and goes over this is the first strong indication that we've confirmed the wave 4 low, as I was saying earlier. And then this is the second one that's a bit more conservative in terms of buying price. So based on your risk management. So my advanced students, without my advanced courses, I teach advanced exit strategies. And one of the things that you want to be having is a trade plan or an investment plan, which is like a business plan. And it's a set of rules, almost like a checklist. And you predetermine the objective, how you buy, how you sell, and just the rules. So you don't have to kind of react in this emotional way. You can anticipate and have a very objective mindset. So, all right, today was a bit of a serious one because I know how people are going to be feeling. And if you haven't experienced this before, it's tough. If your portfolio is down, whether it's Bitcoin or other altcoins, look, it's tough because Ethereum would have also pulled back. We know that. All other coins have probably done a bit of a pullback as well. But if you can understand this, it actually screams opportunity. I do this joke with my wife. She laughs at me when I do it. I go, baby, can you hear that? And she goes, and I go, it's opportunity knocking, right? This is opportunity. And it's scary, but so another thing you can do, I'm just going to add this to you, is rather than buying on the first swing high, what you'll tend to do, one of the safest times to buy is wait for a significant move to the upside, like this, Let me just draw this. Let's draw it like, let's just do it simple. Can I draw it like this? Will it let me? I want to draw. So I'm taking my time here, guys, because it's an opportunity, but I know it's scary because I know a lot of people reach out to me, even my students, kind of like, is this normal? This is, Bitcoin is moving down. Is this that 2017 end of the bull run kind of thing? I go, I don't think so. Not just yet. So you can wait for the first move. First move, that's going to be relatively significant. Normally, it'll be bigger than this wave B. And then wait for the first pullback, which is typically 50 to 78.6% retracement. And then look for your buy for your Bitcoin or other coins. This is a good strategy. This is what I would have done with Harmony. I would have done pretty much like a wave 1 or wave 2, a big correction. And then it did a micro wave 1. The first move did a wave, the microwave 2 on a lesser degree. I had a buying position and then 400-500% up because I had a tight stop loss, and that's what we want to be doing. So take my masterclass. It's free. It's for you. It's the crypto masterclass, how to find your retirement. I cover all this foundational work and getting some brilliant feedback, and this will make really sense to you even more. And again, if you're liking this content, like, subscribe, hit the bell notification, and I will see you in my next video. Hopefully by then Bitcoin's done its reversal and we can see this unfold. But look, the market is the market. It's going to do what it's going to do, but we're looking for the high probable outcomes. All right, I'll see you in my next video.